Okay, so what we're going to do tonight, I'm just going to go through a couple of things and answer these questions. Um, and these are all going to be kind of new concepts. So the first thing I want to share with you is that, and maybe Felipe, you could put this in the chat along with the password. So I've had people asking about where can I go to get on live dials where there's actually people on live dials. And so there's a site that FFL announced, and it's a Zoom site. And is that it? It's just ffltv.com.
It's FFL.TV. That's literally what it is.
Okay, perfect. So anybody that ffltv.com.
No, just .TV. There's no .com.
Oh, .tv. Okay.
Yeah.
So if you want to dial and you don't want to do it by yourself, you can go to that site and you can tie in. And there's just it's open to the entire country. So there's usually somebody on there, I think pretty much all day, every day. And so, because we had somebody in the Slack channel today and they were like, hey, where can I go where there's a bunch of people dialing? So we gave them this location because some people are real social and they just want to be with people all the time. So that is brand new. So let me get into the heart and soul of what I want to show you tonight. So somebody give me just a thumbs up if you can see my screen. Okay, perfect. So I want to talk about final expense because a lot of people I invited to be on this call tonight are, we kind of have two groups. 90% of the volume comes from IULs and the other 10% comes from final expense. And so MJ and I were in the office today just kind of playing around with a 50-year-old male non-smoker who wants a $25,000 policy. Now, just to give you a little clarification on this, in 2020, when I was running face-to-face, I wrote 333 policies. The total submit was 295,799, and my average policy was 888. It's not real high. It's not great. If you compare that to 2023, I wrote 94 IULs, 19 were rejected, 75 were approved, and I forgot to put it in. I think my average IP was like $3,100. So that's the difference between final expense and IUL. But when we were running face to face, a lot of people wrote Mutual Omaha, and the reason they wrote them is they were cheaper. And some people just sell on price. They feel it's an integrity issue. They want to get people the lowest price. When I started, I used to list good, better, best. Here's 25, 20, and 15 from Americo, and here's 20, 25, 20, and 15 from Mutual Omaha. And it just confused people. So I called Mike Killamit, who was our sponsor. And I said, hey, Mike, man, I'm not doing something right. And I showed him what I was doing. He said, well, who told you to do it that way? And I was like, I don't know. I just decided to do it. He goes, don't do that. So what I used to lead with was Americo because their Eagle Select, it used to be called Eagle Premier, had the most forgiving MIB. So I could get a lot of people approved. Also, they had a non-smoking rate for smokers for 3 years. But they were 10 or 15% higher than Mutual Omaha. Well, check this out. Today, they've completely changed that pricing strategy. On a male, 50 years old, 25,000 with Americo Eagle Select is $70.97. And they get a non-smoking rate for 3 years. If they're a non-smoker, that's the price. And Mutual Omaha's Living Promise is $71.89. So today, Living Promise is higher priced than Americo. Now, if you do have a smoker and they're not going to quit, people will tell you, hey, Terry, I am not quitting smoking. I don't want that 3-year thing because I don't want my rate to go up to $104. then go ahead and write a Mutual Omaha smoker rate at $90.87. So they're saving $14 a month in this economy. That's a pretty big deal. But really, if you're not contracted with Americo and you're running final expense, you need to get contracted with them. They're the easiest to qualify. They go from 40 years. So that was the other change. They used to start at 50. And Mutual Omaha would start at 45. Now Americo took it from 40 to 85. And if you're at 100% comp, and I didn't do all the comp grids, there's a million of them, but I just took 100%, that'll pay you 95% on the issue paid. So if it's $100 a month, $1,200, you'll get 95% of $1,200. And then, of course, when you're contracted directly with the carriers, they'll advance 75% of it, or 9 months, and then they'll pay the other 3 months in month 10, 11, and 12. So the range is 5,000 to 40,000. So that was my main point of this. Also, when I ran the underwriting guidelines through ChatGPT, the fifth company to come up the hardest to qualify was Mutual Omaha. Now, the great news on Mutual Omaha, they have a great name, and we all grew up watching Mutual Omaha's Wild Kingdom. So if I were running final expense today, I would lead with Americo. I would write everybody with Americo on their Eagle Select because it's the best price. It's the easiest to qualify for. Let me give an example of why they're the easiest. Most other carriers will ask the question, in the last 24 months, have you had a heart attack, stroke, internal cancer? Americo asked the question, in the last 12 months, have you had a heart attack, stroke, cancer? So I used to come across clients, and they did have a stroke. And when they met with the insurance agent, they wrote them a guaranteed issue Corbridge, and which is a GIWL. Well, then I come a year later, and now they're still within their 2 years, but they're over 12 months. But they got a graded policy, right? So they got to pay into it for 24 months. And if they live that long, in the 25th month, let's say they have a $25,000 policy. If they die in the 24th month, they get all their money back plus 10%. If they die in the 25th month on a graded policy, like the stuff they sell over the TV, Colonial Penn, Lumico, the direct mail, Mutual Omaha, all that stuff is called graded. It has a 2-year wait period. But if you die in the 25th month, you get the 25 grand. I could come in behind someone who wrote a guaranteed issue because they had a stroke, and in the 13th month, the 14th, the 15th, I could replace it and give them day one coverage. And they just sleep better at night knowing that if something happens to them and they don't wake up in the morning, they get the full 25 grand versus just getting their money back plus 10%, right? So that's called a graded policy. So did I confuse everybody, or is that fairly clear? This is pretty basic info, but I know a lot of people have never heard this before. So if I were doing it today, I would lead with Americo because they're the best price, the easiest to qualify for, non-smoking rate for smokers for 3 years. And all they do, by the way, they send a test, and you got to swab your mouth and send it back. And as long as there's no nicotine on it, can't swab your dog. Okay, but as long as there's no nicotine, they keep the rate going. So I would not write Mutual Omaha except for kids policies. That's how I would use the Mutual Omaha. They have a great kids program. It's really good. It's inexpensive. On top of it, their final expense at 100%, Americo pays 95%, and on Mutual Omaha, it's 86%. So it's actually a lower commission. Now, if I run them through Americo and they get denied, the other thing Americo has, they have a really great, I mean, it sounds like I'm promoting Americo, but they really, guys, we got a text from Zach Trudowski 3 weeks ago that said, hey, this week, FFL submitted 9,130 Americo policies. I mean, most companies don't do that in a year, and we do that in a week. So they're really good. And then let's see, what was the other thing I was going to say?
About pivoting if they get denied.
Oh yeah. So they have this feature where you can text message somebody if you're working remotely with them. And their philosophy is, has anybody ever tried to send an email to an elderly person? Because, we're dealing with people that are usually final expense is 50 to 75. And they tell you they haven't opened their email in like 10 years or 5 years, but they text all the time. So they send out a text message, people get it, it's a number, just like you would two-step verification. They read it to you, you put it in, and that's the HIPAA acknowledgement that they signed it. So it's really a user-friendly, a client-friendly tool. Mutual still uses mailing it out through an email, and half the time, not half, but 1 out of 5, it doesn't go through. You're stuck in the middle of it. So if you don't get through with Americo, then what I would do is pivot to Corebridge, which for Bernard and I, we know that as AIG, the guys that have been around for a while. AIG has this simplified issue whole life. When we were writing in 2020, they only had a guaranteed issue. So if I couldn't get them through Americo, and if I couldn't get them through Moo, I'd write a guaranteed issue. The only underwriting question on a guaranteed issue is, have you been diagnosed with a terminal illness? It takes 5 minutes to write and you're out of there, right? This used to pay 50% at 100%. Now it pays 60%, but it's still really low commission. Might pay a little bit higher than that. So now what you can do, you can go to Corebridge, and I don't know if you guys have all the, Francis talked about bookmarking these sites last week. It's really important to do that. But if if I go Americo and I can't get a policy, then I go to Corebridge. I'll start out with simplified issue whole life. And you can see that price-wise, it's right in the ballpark. It's still in the $70 a month for 25,000, 78, 77. If they're a smoker, it's under $100 a month. They go from 5,000 to 25,000. Now they have 3 categories. They have day one coverage, just like Americo or Mutual Omaha. They had graded, which is a little higher price, but it's nowhere near the guaranteed issue. And MJ, one of the things they added, I know they cover somebody, they will cover somebody with active breast cancer.
Yeah. So what they'll do is when you start out with Americo, everything goes simplified issue, immediate coverage, lowest price. And if Americo is going to go graded, okay, it will go up in price. And I mean, for this example, rather than spending maybe $90 a month, we can pivot to Corebridge, which covers it graded, but it might be $80 a month. So that's where we pivot, is if we don't get the Eagle Select. And they do this in their app. We don't have to think about it. We used to have to always start over with a new application. We can continue and pivot, and if they're comfortable where they are, but the point is if something is extreme, like active cancer or whatever, you're going to need to pivot to a different carrier, like Neal's talking about with Corebridge. So I don't want to get too deep in.
We won't get deep in the woods, but I can tell you, well, if it transitions to a guaranteed issue, why wouldn't you just write it with Americo? Because it's 3 times the cost, and it's better for the client to pivot to Corebridge.
Yeah, not guaranteed issue, but a graded. Americo graded is still more expensive.
Yeah, so you have 3 options: day one coverage, graded, and then guaranteed issue.
Right, and Corebridge is the only one. Americo doesn't offer guaranteed. Guaranteed means, are you on oxygen? Yes, boom, guaranteed. Do you have
well, you have any disease under the sun. The only requirement is have you been diagnosed as terminally ill? That's the only question they ask you.
Right. In America, the others don't cover that, where the Corebridge has that standalone product guaranteed.
So literally, I could go out and I could write 295,000 with two companies today, Americo and Corebridge. I mean, literally, you can do that. Now, the third one I have on here is CVS. They own Aetna. And the reason that we use, it's called Ascendo, but it's a final expense product. So has anybody ever gone into a home or talked to somebody and they're 4'11", 325 pounds? Yeah, Ted, you have. So when you walk in and somebody's like that, they're not going to, any company that asks for height and weight is going to automatically reject them. So the great thing about Aetna is that Aetna doesn't ask height and weight. So literally I call it big and tall, okay? But when someone's big and tall, I mean, that's just a nicer way to put it, right? When someone's big and tall and can't fit the BMI index, then what we do, we automatically pivot to Aetna, and they don't ask for height and weight. The other thing that Aetna does that a lot of companies don't do, they offer day one coverage for COPD. Now they do charge for it, like Aetna's, they get a premium. Look at their 9603 for the same 50-year-old male, 25,000. And if you have to pivot to cover the COP, it's 146 a month, but it's day one coverage. And you know what? People they know that situation that they have, and they know they can't get life insurance, and they're very pleased when you come along and you can write it. Also, they go, this is something else. I never knew this. They go to age 89. So, I get calls, geez, I got somebody 86, 87, and I always tell them, break the price gently to them, because they're going to definitely have a heart attack when you hear the premium.
Yeah, and the other thing is, though, just to clarify, that COPD, that has to really be the only thing that they have. They can't have COPD and diabetes and high blood pressure and. So it's a unique carrier. We don't use it often. It's kind of a specialty carrier, we call it.
Yes. Now, just to finish out, if you're at 100% FFL, 100% FFL doesn't mean you're at 100% commission with every carrier. Every carrier has a different rate.
They have a product price, a product.
Yeah. So, and it's by product. So I'll have people all the time, that go, man, I only got 60% or 67% or whatever on my Corebridge policy. That's because they take everybody. They don't have as much profit in it, and so they price it accordingly and they pay commission accordingly. But Eagle Premier, 95%, Mutual Omaha, 86%, Corebridge, 92%. And then what's interesting, America, or Aetna, sorry, too many A's. Aetna does not reduce the commission like Corebridge does on the different grades. So if you had to do somebody with COPD and it's 146, it still pays 92.5% commission. So,
and this is all new since conference. They announced this at convention. These carriers were going to be doing, new products and pricing. So this is, if you've been writing for a while, this is why we're going through this, because they finally came out with just new structures, new products, new underwriting. So we're just trying to keep on top of it.
So when you go to a conference and you see Sean, Mike, and everybody just gooing over America, the reason they goo over them is they say, look, why don't you start at 40 years old? And so they do it. Why don't you lower your prices so we don't have to write with Mutual Omaha, because they're the hardest to get qualified. So they do it. So they bend over backwards for the company, and that's why they submit 9,100 policies. Okay. So if I were doing it, I would do Americo first, and then I would pivot to Corebridge, and those could be the only two carriers you need. And then occasionally you'll run into big and tall and you got to do the Aetna. But it's day one coverage if they have COPD or they're extremely large. Yeah, Ted, you got a question. Where'd you go?
I'm here. Hey,
Yeah.
the comment about, first of all, I'm surprised that Americo's smoker is higher than everybody else. Because
That's after 4 years. They give you smoker rate for the first 3, and if you quit, you keep it. If you don't keep it, then they raise you to that price on the 4th year.
okay, so it's 70.97 for the first 3, and then
Yes.
104. Okay, that's
Now,
great.
we used to say, hey, people would ask me, Neal, do they have my DNA? How are they going to know it's me? I'm like, I don't know. I don't know how they're going to know it.
Yeah, but so Ted, see in the comments why. So are you a smoker? Yes. They will give that customer non-smoking rates for 3 years if that smoker has a desire to quit. Then
Right.
year 4, they'll send them the mouth swab. That's why Neal said, if someone says, I ain't stinking quitting, then you aren't going to, you're not going to lock them into something, only have it to go up year 4. That's when then you'd pivot to a smoking.
Right, and that's where I was going.
I got the macaroni in the oven.
Oh, hey, can you guys mute yourself, please?
And get some of that.
I'll find them.
Okay.
So that's where I was going. So Moo actually has a utility here in that when that person says, I'm a smoker, but I'm not going to quit after 10 years. So then you can pivot right into that
Exactly.
Moo smoker rate, and that's great. I didn't know that.
That's why we're doing this tonight, because those little nuances, final expense isn't hard if you know the nuances, right? And so it used to be we'd have all these carriers, 10 or 12 or whatever. It used to be royal neighbors who didn't ask for height and weight. When they started asking that, they just went away with us. But now we got it down to all you got to do is know Americo and know Mutual Omaha for smoking, and then pivot to Corbridge. And then if they're big and tall or COPD, just remember Aetna. So it's only 4 and pretty reasonable.
Last question. The comment for Corbridge about covers breast cancer, is that active breast cancer?
That's active breast cancer. That was one of the new things. And I think, MJ, they said one of the hepatitises.
Wow.
Yeah. So that's a big deal. That was a big announcement about 6 months ago. So they've really improved their offering. And I wanted to share this stuff with you. What about Ethos? Man, Ethos is, it doesn't pay, it pays really low comp. But Ethos and Americo, Ethos True Stage is really easy to get approved. But it's really low comp, so I didn't put.
Yeah, when you log into your Ethos agent portal, notice the comp. It's super low on that product.
Yeah. And then just to finish up this, I wanted to show you so why do people write final expense? Because at 100%, they're mostly in the 90s commissions. Now, the other thing that was interesting, I ran this analysis on 5 companies. Americo, these are IULs. Americo, Ethos, National Life Group, Mutual Omaha, and F&G. And it ranked Americo as the easiest to qualify for. And I'm not saying that we all switch from National Life Group because we all know the benefits. It's super easy to show. It's easy to illustrate. Nobody has the technologies that NLG has. But I'm saying it because if you show somebody and you close them, you say, hey, Bernard, listen, it's going to take the process. It's going to take 3 days to 3 weeks to get approved. After you get approved, then you're going to have 120 days that you can raise the premium that you're paying in or lower it. So, are you okay with the 500 a month? Do you want to raise it or do you want to lower it? So we submit it. And then let's say, now as soon as I hear something, I'll get back in touch with you. If they get declined, they usually are really good at NLG at telling you why they got declined. Hey, this client got declined because of all these medical conditions. Then you can make a judgment. Does it fit the Americo underwriting? And can we get them through Americo and just get them an IUL? Or do we have to pivot to whole life? So this is why I did this. And look at, so they're 85%, Ethos is 85%. So when I got this back, these two were the easiest according to ChatGPT, having all the underwriting information to get someone qualified for. National Life Group was in the middle, and the two most difficult were Mutual Omaha and F&G.
So Neal, let me ask a question. So again, we're not shifting on IULs. National Life Group is our financial partner, especially for larger customers. But in two scenarios, if someone is what, $100 or less a month, or they have health issues, they can't get qualified, that's when we would pivot to Americo. Is that a broad statement?
I would say that if they're even $100 or $150 at that rate, depending on their age, they're never going to accumulate a significant amount of money. So at that point, I put them through Americo.
Okay, because I know we've got Felipe and Danny writing a lot of, I don't want to confuse people. If National Life Group continues to be our partner in unique situations, we would pivot to Americo.
Yes. Spoken like a true diplomat, Mary Jo.
Well, I want to keep it clear so we don't get confused.
Yeah.
Well, or you can get a bigger bang for your buck if you're looking for a little more coverage than a final expense. You can get a little more bang for your buck with a MU IULE or an Americo IUL, but you're generally just not going to get the capital appreciation.
Right.
But at $100 or $150, I mean, anybody that thinks they can put $100 into an IUL and be rich when they retire in 10, 15, 20 years, they're just not serious about it. So the other really, really important thing is asking people how much debt they have that they have to cover and whether they have any life insurance. Because if they don't have any life insurance and they got a lot of debt, they got $250,000, then these two tend to lean more towards the death benefit. But those Americo policies, they when you look at them, they illustrate at 4.5% and 8.5%. So you can show somebody how they work, but anyway, so yeah, good point, MJ. So this is our go-to because we built our whole model around it. They bend over
as a financial partner on unique situations. We have the others.
Yes, exactly. And what I'll do is I'll get this. As a matter of fact, what I learned last week is if I close it. How was that, Danny? You were here all day. Yeah, he's heard all this. I'm like, hey, Danny, what do you think about it? Poor guy. So let me see if I can upload that real quick. Now, the next thing we're going to cover, you're going to hear a lot about. And let's see. Final expense. I think this is it. Let me just open it and make sure real quick, just so I don't upload something. Yeah, this is it.
Okay. Did CoreBridge replace AIG?
Yeah, they just changed their name, Jerry. Yeah.
Oh, did they? Okay.
And so when you and me were running, it was really just we had the guaranteed issue, GIWL, guaranteed issue whole life. Today, when you go to the site, they have SIWL, which is simplified issue whole life. And that has two components. That has the day one coverage. And if they need to slip you into a graded policy, it's a little bit more, but it's not as expensive as those AIG guaranteed issues we used to write. Those babies they'd take your breath away. But, it was the only thing we could do for people. Now, the other thing I want to share with you is you're going to hear a lot about this, and I want to blow the smoke off. Let's see. Okay, so we did that. We did mutual. We did Corebridge, Aetna. Okay, so you guys all have been into your Gateway. I know to get contracted, Leanne's brought you through Gateway, and Gateway is kind of a one-stop shop where you log in once and you don't have to log into all these individual things. So you don't need 100 browsers open. And if you want to check your issue paid, you just do it right here. That's going to become real time. So Jason, if you write a bunch of policies and you wonder whether they've issued, instead of having to call every carrier, they're going to drop these in eventually in real time. So you'll be able to go here, and you can download your policies, right? But this thing, the Life Center. So the Life Center, you're going to hear a lot about. Right now, there's a thing called the Toolbox. And Felipe, do they charge, is it $40 a month?
Oh, the private one you can buy, the insurance toolkit?
Yeah.
Yeah, it's $40 a month.
Yeah, $40 a month. So what it's for is when I started, I'd be in a house, I'd be working with somebody, and they would I'd get stumped. They have some illness, so I'd call Mike Killamette and I'd say, "Hey, Mike, they smoke, they're this, they're that. Who should I write?" And if he didn't pick up the first time, I'd call him back a second time. And they'd pick up because they knew we were with a client, and we'd ask the question, and they were the answer man. And then the Toolbox came along, but they're charging people $40 a month for that. So everybody is charging for their tools. So Integrity created this, and MJ, am I on the right thing? Integrity, good evening, Neal. Can you see that?
Yes, I see
Okay.
that.
So what this is going to be, this is called the Life Center. And so what you'll do is you can import all your leads in here. And this is so cool. So this is Bill Smith, my imaginary friend. He's 37 years old and he's a male. So instead of calling me once and then calling me twice and giving me the conditions, this is free, by the way. You can go to the Life Center. You can click on, okay, what are you doing? Are you doing IUL, simplified issue, or final expense? So let's say you're doing final expense. And just for simplicity, we're in Alabama. We're going to make this person really normal. They're 6 foot. They're a male. They weigh 232. They were born in 1988. And we're going to go through here. Now you can put your health conditions in here, lisinopril, whatever you want to type in there, or if they don't take any meds, you don't have to put it in there. Any critical, let's say they don't have any issues, okay? And then you can come down here to a quote. Let's say they want, here's another trick for you guys running final expense. This changed my business. I used to tell the customer, Mary Jo, I'm obligated by the carriers to give you the maximum amount that you can qualify for. So in the case of America, what did I say? It's 40,000.
Well, not give them, tell you. I need to tell you what the highest you qualify for.
Yeah, well, just different vernacular. But yeah, I have to, I want to tell you the most you can qualify for is 40,000, and the price on that would be $156 a month. And then what I do is I say, I'm going to give you now 3 options to choose from. It's amazing, especially the guys, how many guys jumped at that and said, that's what I want. I want the maximum. I never wrote the maximum up until the time I started saying that. So anyway, so on, let's say 25,000 here, we want the, let's see, what are
Because you're with the 37-year-old looking for final expense. Not every carrier offers that.
Yeah, so Transamerica, it gives information. You know, Transamerica, oh, because they're only 37.
37. You're under the,
Ah, okay. So let's go back and let's change that to 40. Okay, good catch, MJ. So where do we, April
change the year.
19,
Well, if you need them 40,
so what year is that?
I don't know. Let me get a pen.
Oh, 4, 20.
85.
Yeah. Hey, we were in 1985, honey.
Oh yeah, that's right. Year we got married. Been married 40 years. Okay. So if everything's really good, healthy, no issues,
Now, yeah, but now here's the thing. I do know,
level. So Eagle Select One, Americo. So what it actually does, it goes down, I think, and it goes into your HCMS. It sees which carriers you're contracted with,
Yeah.
and then just brings up those carriers. They're all good carriers. I'm going to tell everybody 100% of the time, usually Transamerica will be on here. I would highly suggest not writing Transamerica versus Americo. Now, here's the reason. Americo has a great back end. Easy to get customer service, make changes.
Easy app.
Easy app. I remember Sean Mike talking about Transamerica saying they promise us that they're going to have an e-app pretty soon.
Yeah.
So
And
they're
they
just,
do. They do.
yeah. So anyways, enough on that. But then here's CVS Health, which is Aetna. So this tool will allow you to sit in the living room or on the phone with somebody, put in their information, ask them questions, and it'll kick out. Let's say, you know, he's like, oh, come on, Neal, I need more insurance than that. So, well, how much you looking for? The max I can do is, let's see what it says for 50,000. Okay. So it's 109 for 50 grand. The guy's like, great, let's do it. You just hit apply.
No, that's Transamerica.
Oh, sorry. Oh, yeah. Okay.
When you go that high, America only goes to 40,000.
Got it. But it does take you, they use the iGo e-app, just like National Life Group and just like,
Yeah, so everybody will,
Mutual Omaha.
point is everybody can get on your gateway. And let me just say this. The most important thing too, once you go into gateway, you log into this, it's a single sign-on, an SSO. Whatever carriers you have in your HCMS and you have logged onto their site, this automatically, you log into gateway and then you will be logged into your carrier site. That's huge. Like Neal said early on, you don't have to have 5 browsers open trying to pivot from one carrier. Oh, they got denied, got to pivot here. A single sign-on, it's just golden. That's a big deal.
And we've been working, I mean, when we started, they didn't have gateway. And so, we were afraid to close our browsers because we didn't think we'd ever find that site again.
Yeah.
I mean, so, don't shut the computer off. So that's how we started, and everything is becoming very integrated. So it's becoming more and more user friendly. Now, last week, so let's do this because that's plenty. And Terry
Trying to keep it super basic. It's just a one-stop shop.